Thank you for joining me. I'm Juan. Today I want to discuss a swing trade strategy. This is good for beginners. I always get the question, what's a good strategy for swing trading? How do you swing trade? The first thing I say is that the majority of my investment, you'll find them in index funds. Small percentage, I do swing trades. Small percentage, speculative stocks, growth stocks, and small percentage, I day trade. But the majority, you have to pick a good, reliable index fund that's going to be your retirement over 30 years. I do get a lot of questions about the Excel sheet. Those are just stocks that I've spoken about that I was either bullish on or bearish on. There's very few stocks on that portfolio that I've invested in. Maybe Senseonics is one of them. But just stocks that I'm interested in, and if I was bullish and if I was going to invest, how would it be doing at this time? A couple months ago, I made this video, this post about the SPY. And I had a thesis about the SPY. It was coming to an area of support, and it was extremely important support to me. So because of past support and Fibonacci retracement, those two areas, I said in the post, I said this is a real important part. Now, for the swing trader, you want to see what it does when it taps that area of support. And that's exactly what I put in my post. I said, and you take it day by day, I said it's coming upon support, the Fibonacci retracement support, it's strong support. I want to see how the candle closes, how the next candle reacts, because you also have to consider price action. Does it drop below that support and then the next candle, now that support becomes resistance? Well, then I'm saying I'm going to have a bearish thesis. Does it bounce off the support? Maybe go below it, but there's like a wick candle, then it breaks above it. Then there's a green candle that prints. And now I'll say, okay, my thesis is this is going to be a support and it should climb over the next few weeks to this period. So this thesis, I'll show you how I did it with the SPY. You could apply it to any ticker. And the great thing is, if you have those important areas of support, Fibonacci retracement support, you can set an alarm so you don't have to be watching it every day. You can have multiple stocks like Target, Amazon, Microsoft, and you say that, okay, this area of support, let's say 320 is support. At 323, I want to get an alert. Now you get that alert. Now you keep it on your watch list and you see what it does at that support. But let's take a look at the screen here. So this is the post I put on YouTube here. And this was over a month ago. And this blue area was my thesis. I was saying it's going to challenge this white area here, bouncing here. And if it does become support, then my thesis was that it was going to climb over this and fill this Fibonacci retracement and fill this channel here. That was my thesis. I put it clearly here, and it was very easy to follow, low risk, because if this didn't hold, then you don't take the trade. So it went on this big bullish run that we've had for such a long time, and then it started the downtrend. So we've been on the downtrend, as we know, because of the interest rate spikes, just the macroeconomics of everything, war, supply chain issues. We've been on a major downtrend, right? So what I've done is I've just built this channel over this downtrend. So this downtrend holds true. It bounces off of here, bounces, then it doesn't break this, then down. Then it had some trouble breaking the EMA here, broke out of the channel a little bit, tested the channel here, down. So this is the post that I showed you before it got filled. Then I said my bullish thesis, on July 22nd, the SPY bounced off of support. July 22nd is over here. It bounced off of this area of support and rallied 16%. So I said if it bounces off this area here, this 351, 353 zone with bullish price action, that's the important part, bullish price action, and I'll show that, we could see a 12.32% rally over the next month. So why did I say this? So first, we had here red candle. It tested this area, broke below it, but then we see this wick, this long wick here, thin body. This usually indicates reversal. I saw this. I made another post. I said, okay, we got to see how the next candle opens up. The next candle opened up, big green bullish candle. So this would have been a great entry right here at 356. And this is also right here where you can set an alert. Now, the reason I had this area zone, this was another Fibonacci retracement area. And it's also kind of peaked right at the channel. So that's why I said here, it could rally 12.32%, which was this, you see here, 12.32%. And that's exactly what it did. That thesis that I built for the SPY, you can build that strategy for any stock. Just follow it, build areas of support and resistance. Now, the more taps on your support or resistance, the stronger it is. So that's how you build your thesis. And then your resistance, wherever there's passive resistance, that can be your take profit area. But like I showed you here on the SPY, that 12%, because it rallied in the past, because that was an area of resistance in the past, and because of the Fibonacci retracement fill of the past. All those areas gave me a strong thesis that this is a possible bounce retracement fill. And then now it's testing the channel. That strategy, you can apply it to any stock. But now let's say, what's my next thesis for the SPY? And again, you can apply, I'm just giving the SPY as example, but apply it to any stock that you want. So let's take a look at the screen. Okay, so now my thesis would be, we can just guess in the past. Look at this. Look what happened 4 times. It tapped here, dropped, tapped here, then dropped 12%. Tapped here, then dropped 15%. Tapped here, then dropped 15% again. So this happened 3 times, right? So if you want to build a thesis, a good thesis doesn't mean you're going to be right, but you want to have a good thesis. I would say, okay, I'm looking at the SPY. Look at it. Look at it perfectly testing this channel. It's right here. It's testing this channel right now. I want to wait. It's not entry right now. I don't want to enter. If I enter, it's high risk because it can keep going. You want to wait to see what the next few candles do, because even if it drops a little bit, it doesn't mean you get into late. If it's going to drop another 15%, if you can capture 10% of that, then that's fine. So what I would want to do is wait for the next candle. If it breaks above this downtrend, look at this downtrend. It wasn't able to break it before. Right here, it broke it slightly, but then it came back down the next day and it closed below it. Then it broke it, closed above it, but it was still a thin candle. And you see here, look at this candle here. This is a perfect example. 2 wicks and a small body. Like we mentioned here, it's in reverse though. So here, 2 long wicks, small red body, reversal, it went green. Now we have the opposite here, 2 long wicks, small body, reversal red. So that's waiting for price action because indicators are lagging, but this is structure, right? So you want to see now, this is a full candle. This doesn't tell me anything. This tells me that the trend can keep going. I want to wait. I want to see maybe a small body, 2 long wicks, and then followed by a red candle like this. That'll be a good entry. Or I want to see it break above this. If it breaks above this downtrend and then it breaks above and then now it goes back down and tests it again and it stays above it and tests it a second time, then I'm going to have a more bullish thesis, and I'll probably say, okay, now I'm shooting for this 421 because this is a Fibonacci retracement area, and I would check for areas of resistance and figure that out. But let's say you see reversal and then there's some red, then where can you take profit? You can, if you want to get a couple puts, we can say that maybe it's going to drop and say, okay, we'll say November, December, January, 2 months, 15%. So we can go for about 339 around here. So maybe like we can go right around here, 12%, 13%, 348. So that would be a possible profit target area. If it starts becoming bearish, I would say I want to see a breakdown and then over the next month, maybe drop about 15%, 14% to this 330 area. There's other strategies. That's one strategy that you can start off with. But let me explain a few things. Swing trader, little less riskier than day trading, but also very risky, especially if you do this type of trade with options. You have to worry about time decay. Only use a small amount, an amount that you're comfortable losing. The best thing is to buy and hold, long-term trading, invest in a company that you believe in, go through the financials, invest in that company like if you were going to buy that company, like if you were going to be an owner and you were going to be a part of that business, that you have to believe in it. And the financials have to make sense. You don't want to overpay for it. There's a lot of good companies that are extremely profitable that went on this bull run and that are still pretty expensive. So that was just a quick video tutorial on how to build a solid swing trade strategy. Thank you for watching. See you on the next video.